The insane houses crisis explained. The housing crisis in America has been making headlines lately, with news about declining real estate value and rising foreclosures. Still, it is not just homeowners who are affected by the dramatic downturn in the housing market, it's everybody. With buyers struggling to get loans and mortgage companies tightening up their requirements, many sellers are having trouble selling their homes, dragging down the prices even more. And those who manage to sell at least have to contend with the fact that they will receive far less than they would have just a few years ago with the same property. It's been hard on both sellers and buyers alike. But things are getting even more difficult now that the mortgage crisis has reared its head once again, threatening to send us into another recession. Hey fellas, you're in for a treat. Welcome back to Econify. If you haven't subscribed yet, you're missing out a lot, so hit the like button. Also, like our previous videos too. In today's video, we'll explain how the US housing market has gone from worse to worse. Don't forget to tell us your opinion in the comments. We're ready to launch, fellas. Do well to follow us all the way to the finish. Alright fellas, let's fly. Rent prices are out of control. A whole lot of folks are being forced into homelessness because they can't find affordable homes. And those who have homes spend so much time working to make their monthly mortgage payments that they have no time left over to spend with their family or do anything else worthwhile with their lives. However, many people believe that the housing crisis in America was caused by too many subprime mortgages being given out to people who couldn't afford them. Well, this is partially true. Nevertheless, the real cause of the housing crisis lies with the banks and lenders who gave out these mortgages without caution, handing out loans to just about anyone with a pulse. No matter where you look in the United States, you're bound to see headlines about the mortgage crisis. People are losing their homes left and right, and lenders are taking huge losses on the adjustable rate mortgages they're offering home buyers. But while the situation may seem dire at first glance, it's much worse than many people realize. Mortgage rates are sky high. It's probably not the best moment to buy a house. It's evident that it might be difficult to make the monthly payments on a mortgage at today's high interest rates, especially when added to the cost of owning a property. However, if you're in the market for a permanent residence, now may not be the time to do so. The housing crisis has affected all aspects of American society. The downside to renting is that you may not want to sign up for another lease after 1 year of occupancy. It could also be a lot more expensive than owning a home at the end of the day because some landlords charging high rents or fees. Half of the home buyers can't afford their monthly mortgage payments. As a result of the housing crisis, many potential buyers are concerned about being able to keep up with their mortgage payments. Further, what's the deal? More than half of all the home buyers are unable to meet their monthly mortgage obligations, according to the National Association of Realtors. For instance, a home buying family of 4 with a median annual income of $50,000 would have an after-income tax of $36,200. This means that they would be unable to purchase a home costing $191,000. It is not surprising that there is a severe housing shortage if people can't buy homes because they can't afford either the down payment or the monthly mortgage payments. Buying a home seems impossible without significant help from financial institutions like banks. Home prices continue to rise while wages stay stagnant. People continue looking for cheaper homes, but the problem persists. It would take more than one solution to fix this problem because so many factors play into it. What will happen if the interest rates go up? What if the incomes don't increase? How does this affect the real estate? While this might seem like a localized problem, it is affecting the real estate market. It's making it more difficult for people to sell their homes and for new buyers to find affordable houses. Real estate agents have difficulty providing viable solutions because prices are too high and there aren't enough homes on the market. The housing crisis has created a ripple effect that's hurting not only the people, but the economy as a whole. What can we do about this? One solution would be to increase government subsidies for affordable housing. However, considering all the budget cuts, this might not be feasible. Another idea would be getting rid of mortgage tax deductions, which primarily help upper-class Americans, and using those funds to build low-income rental units. We need to fix this now, before it spirals out of control. What is the cost of living? In the past, housing cost was manageable for most Americans. Now things are pretty different. We've changed, governments change, technology's changed, and as wages have stagnant, living costs have skyrocketed. This can be seen by how much it costs to buy a house. With wages not keeping up with inflation, people are paying more and more for less and less, while also struggling to save money because they are going into debt to afford this rent or mortgage payments. With all this being said, the housing crisis in America is out of control. These numbers might seem alarming, but I'm sure you're wondering, what can you do about it? Well, our only hope is the next generation. Millennials have been born into a time where they are strapped down with an education system designed to line big businesses' pocket instead of creating meaningful learning experience for kids and saddling them with crippling amount of debt before they can even start their adult lives. The lucky few that find work at places like McDonald's or Starbucks will be stuck there for life, simply because of student loan debt. Even if somebody does manage to escape from those heavy chains, society is constantly bombarding them with ads telling them to buy everything on credit so they'll never be poor again. Home ownership can break your bank account. Owning a home has been the American dream for decades, but what happens when you can't afford a home because it's too expensive? Living in an apartment can be so much cheaper, but the housing crisis means that you may not be able to find affordable housing. Even if you want to live with a family or friends, this might also break their bank account. The only answer seems to be rent, which can also take up a lot of money, so it's no surprise that people are trying out new methods like renting a room for someone else or even co-housing. We're still seeing press on this issue. More companies are making it possible for people to buy houses at lower rates, and some politicians are proposing bills to help make housing more accessible. But until the solution comes along, renting will remain expensive and frustrating, and there doesn't seem to be an end in sight. Millennials are losing hope and giving up on home ownership entirely. This generation has been hit hard by the housing crisis. With many people still reeling from the recession, they're struggling with student debts, increased rental costs, and lower wages. Some are even returning to live with their parents. It is a bleak outlook that doesn't seem to improve as prices continue to rise across the country. While some may see this as a temporary setback, others see it as a sign that millennials are giving up on home ownership entirely and settling for renting instead. And there is no telling when things will improve. If anything, they'll only worsen. The median home price rose 3% last year, according to Zillow, which was double what Americans expected. Not only does it feel like buying a house is out of reach now, but interest rates are going up too. In the first 3 months alone, average mortgage rates were 6 points higher than the start of the year. The housing market has been very competitive for some time now. It is so hard to find an affordable place on the market. Most people have to be approved for a loan before they can buy a home. But with the interest rates so high, it's become difficult to afford a down payment. When people don't qualify for loans because their salary isn't high enough or because they don't own property already, they can't buy their first home even if they want to. For example, if you're a single person who makes $50,000 a year and you don't own a property, it means you're going to need to save up close to $5,000 just for your down payment. A family with 2 children making $25,000 a year will need to save up close to $5,000 for their payment. Now that's something, don't you think? Hope you enjoyed this video. I did too. So hit the like button and subscribe for all our fantastic videos. You'll love that. Yeah, you can turn on the bell notification too, so you can get a lot more videos like this one. Cool, right?